Hello everybody, my name is Teresa and I welcome you to this new RankiaPro interview. Today we're going to talk about cryptocurrencies and ETF with André Dragosch, Director and Head of Research Europe at Bitwise AM, the largest American manager of cryptocurrency index funds. Hello André, how are you?
Hi Teresa, I'm fine. How are you?
I'm very well, and I want to thank you for being here with us today, since I know you must be very busy, so we really appreciate it.
Thank you. Happy to be here. Thanks.
So let's start this interview, since we have a lot of interesting topics to talk about. So the first thing that our audience would like to know is the following. Given the extremely high levels of volatility in the cryptocurrency market, the complex regulation of the market itself, and also the mistrust traditionally raised by organizations such as the Securities and Exchange Commission, we want to ask you, why did Bitwise Asset Management decide to invest in cryptocurrencies and not in another type of asset class, and why use an ETFs?
So I think crypto, more broadly speaking, is one of the mega trends, right? We have mega trends like AI, artificial intelligence, space exploration, autonomous driving, or robotics. But I think it's even more than just a thematic investment. It's a whole new financial system, right? And it's a whole new asset class next to equities, bonds, and commodities. And I think the big advantage over other assets, like alternative asset classes, like private equity or infrastructure investments, is that it's a new liquid asset class, right? It's highly liquid. The major crypto assets, they have billions of dollars of traded volume on exchanges. And so this is really interesting also for traditional financial investors. And the reason why we decided to offer crypto asset ETPs and all other kind of ETPs is we simply believe in the future of Bitcoin and crypto assets. And our mission as a company is to guide investors into this new emerging asset class that is volatile, right? But also very promising and useful. And so we just provide the access, because I just mentioned it's a whole new financial system, right? It used to develop in parallel to the traditional financial system. Now it becomes more integrated. But that's also the reason why access is relatively difficult, but we want to change this, right? We want to provide access to traditional investors.
Okay, that was really clear, Andre. Thank you so much. Not related to what you just explained, I wanted to ask you, what is Bitwise AM investment philosophy?
So I think our company is made of people who are crypto specialists, right, in their field. So what is different maybe to other competitors who are more like generalists is so we don't cover all kinds of asset classes, right? We just cover crypto assets. We don't cover equities, maybe crypto equities, but we don't cover bonds or like commodities, FX or anything. We just focus on crypto assets. And what we try to do is we're trying to offer the best institutional grade products with the highest quality and transparency for our clients. So we provide secure custody of assets. We are working with professional custodians like Zodia, who are part of Standard Chartered. We provide professional trade operations. We have professional regulatory oversight. So 100% of our products are regulated by financial services authorities like the BaFin in Germany. And we provide this expertise, right, of crypto specialists. And I think this combination is, the perfect mix to have a strong partner for all these things related to crypto asset investments.
Okay, very useful. Thank you so much, Andre. Let's talk about how the rise of cryptocurrencies has begun to spark the interest of European institutional investors. What do you believe is the role of a cryptocurrency ETF in an institutional investment portfolio?
So I think there are a couple of points to this question. So as of now, crypto assets are a $3.5 trillion asset class, right? Bitcoin alone is around $2 trillion. So it's the 7th most valuable single asset, right? It's just between Amazon, right, and Saudi Aramco. right? Should you pay attention to Amazon, the biggest online retailer in the world? Should you pay attention to Saudi Aramco, which is the biggest oil producer in the world, right? Our answer is definitely yes, because so Bitcoin and other crypto assets, they've been rising in market cap relative to other asset classes. They're still small, right? Because I think worldwide you're looking at maybe $3 trillion in assets under management. So it's still small, maybe 1% of all assets, but it's growing very fast, right? And so if you're an investor that has zero allocation, you're not really replicating the whole global market of investable assets, right? Which crypto assets are increasingly becoming a part of, right? So in order to replicate this whole universe of investable assets, you should have an allocation. That is probably one answer to this question, right? Another one is simply just mathematics. I mean, if you do portfolio optimizations as an institutional investor, I think the optimal allocation to crypto assets is around 2 to 3%. We've done studies, quantitative studies, that imply even if you have a diversified crypto asset basket, I think the optimal allocation is even higher. It's between 5 and 6%. So if you allocate based on things like risk parity or maximum Sharpe ratio, it's definitely beneficial to add crypto assets to your multi-asset portfolio, because you can simply boost risk-adjusted returns of your portfolio, right? So you can build better portfolios, essentially. So our message is to institutional investors, not having an allocation to crypto assets right now is an active decision, right?
Now, let me ask you, how does Bitwise AM assess and minimize the risk in its ETFs? And I think this is a very important topic, since one of the main reasons investors hesitate sometimes when it comes to investing in cryptocurrencies is the high volatility of the environment in which the cryptocurrencies themselves operate. So how do you manage it?
So we don't try to mitigate the market risk itself. We don't try to mitigate the volatility of the asset class, because what we want to do is we want to provide access, 100% access to the asset class. Most of our products are just passive investment products, ETPs, right? Or ETFs in the US. And our goal is to track the underlying asset, right? Bitcoin or Ethereum or any other crypto asset as close as possible, right? So that's why we don't try to mitigate the market risk. We try to track it as close as possible, which is why our investors get this kind of volatility profile. But that being said, so volatility can be good and bad, right? I mean, downside volatility is obviously bad, but it can be also good because it tends to increase rapidly to the upside as well, right? But what we've seen in general since over the past 10 plus years is there's been a structural decline in volatility, right? I mean, Bitcoin used to have a realized volatility of around 200%, right? Annualized a year, which is crazy compared to traditional financial assets. But that was 2012. That was more than 10 years ago, 13 years ago. And now with increasing adoption of the asset class and increasing scarcity, we've seen a structural decline. And now realized volatility is around 50 to 60%, which is still high, right? Relative to other traditional financial assets like equities and so on. But probably not so much it's probably comparable to Max 7 stock investments like Nvidia or Tesla, right? They have a similar volatility profile. At the same time, many professional investors are exposed to these stocks, right? I mean, what we've just seen recently is Nvidia in one day dropped like 17% because of the DeepSeek AI saga, right? It had a drawdown of 17% in one single day, while Bitcoin just declined by 2-point-something%, right? 2.7, I think. But no professional investor would say, okay, Nvidia is too volatile, right? I think with all that being said, we also expect the structural decline in volatility that we've seen over the past 10 plus years, that this will continue as the asset class matures, right? we will increasingly see more adoption by institutional investors, pension funds, and so on. Sovereigns, right? The US government wants to invest, and so on. So volatility will decline, and especially with regards to Bitcoin, our expectation is that Bitcoin itself will become more like a safe haven asset with less volatility over time and less kind of a risky asset.
I also wanted to say that another reason why investors might not invest in cryptocurrencies sometimes is because of concerns that relate to environmental concerns regarding cryptocurrency mining. Now, I wanted to know, how does Bitwise AM address this issue?
I think most of these investor perceptions, they are somewhat outdated because they relate to a time when mining was primarily located in China, right? And that was before 2021. So the majority of Bitcoin mining used to be in China, and China has a higher carbon intensity than other regions, right? But what happened 2021 was China actually banned Bitcoin mining in China, right? They banned the domestic Bitcoin mining. They made it illegal to mine Bitcoin in China. And so what happened is many Bitcoin miners, they migrated from China to other jurisdictions like North America, primarily US and Canada, where you have a higher where you have a lower carbon intensity, right? You have higher zero emission energy. And so what we've seen since the China mining ban in 2021 is the percentage of zero emission energy sources in Bitcoin mining has increased rapidly. Used to be below 50%, around 38%, I think, before the China mining ban. But now it has increased above 50%, and the latest number imply on a global base, it's around 58%. It's close to 60% zero emission already. So hydropower, also nuclear energy is considered to be zero emission. And in places like North America, it's even higher. It's close to 70%, right? So nonetheless, I mean, carbon emissions are not zero, right? And that's why we have been actively involved in carbon mitigation, right? So I think we've done this carbon mitigation since July 2021, and since then we have mitigated around 54,000 tons of CO2, right, via various projects, such as reforestation projects. So it's so carbon emissions are not zero, which is why we've mitigated this. But that being said, I think from a global perspective, if you look at the second highest, with the second highest share of zero emission energy sources, it's the banking industry, which has around 40%, right? So Bitcoin mining, despite all this like negative perception, is already the greenest industry, right? So I think this has somewhat to do with this outdated investor perception that I talked about at the beginning with the China mining ban and so on.
Okay, that was really, really, really interesting, I have to say. Now that we're talking about the way that Bitwise AM works, I would like to know, what is the role of stablecoins and altcoins in the ETFs offered by Bitwise?
So I think so we don't offer stablecoin investments per se, right? Because what are stablecoins? Stablecoins itself, they are somewhat digital twins, right, of fiat monies like the US dollar or the euro on a blockchain, right? You can transfer them easily via wallets on a mobile phone. You get settlement and transaction speed within seconds compared to like banking transactions cross-border, which can take a couple of days sometimes, right? So that's why people use stablecoins, but we don't offer them per se, because what's the point in offering like a euro or a dollar investment apart from the exchange rate maybe? But of course, I mean, many altcoin ETPs like Ethereum or Tron, I think they profit from stable coins, right?
Thank you, Andre. Now, let's address one of the most talked moments of this year that has really just started. Because last week, Donald Trump returned to the White House, and one of the first things he did was promising the deregulation of the cryptocurrencies and the possibility of establishing state reserves of such cryptocurrencies. Do you think this will impact the European cryptocurrency market?
I think most certainly because so from a pure signaling perspective, excuse me, so it's bound to have an impact. I mean, regulators in Germany and even the European Parliament, they've been talking about Bitcoin, especially since there was this prospect that Trump could win the White House, right? And I mean, one of the key campaign goals or campaign promises during Trump's campaign was to introduce a Bitcoin bill, right, in the US. And this has already, I think, proposed in July last year. And I think since this proposal and this focus on like the crypto industry in the US, I think there's also been a broader discussion internationally, right, in Europe, but also elsewhere. And this is a kind of signaling effect that shouldn't be underestimated, right? I mean, we've just seen the crypto-related executive order, which includes the establishment of a national digital asset stockpile in the US, right? They want to evaluate which kind of crypto assets go in or go out, right? I think as of now, the US government already controls 198,000 Bitcoins, right? It has the highest stockpile of Bitcoins already, official stockpile. I think the second highest in the world is China. They hold around 190,000 Bitcoins. But of course, because they've been seized due to illicit activities in the past, what they wanted to do initially before this crypto executive order is they wanted to sell these Bitcoins and other crypto assets, right? Just to raise funds. But now with this plan to establish such a national digital asset stockpile, this plan is off the table, right? They don't want to sell this anymore, which is positive, you know. So this is taking some supply off the market. And what is even more is they want to introduce the Bitcoin bill in Congress in US, right? Which includes the purchase of 200,000 Bitcoins per year for the next 5 years, meaning around 1 million Bitcoins in total, and a holding period of 20 years, right? And just to put this into perspective, so 200,000 Bitcoins per year of purchases is equivalent to around 1.2 times the new supply that is coming online, right, every year. So they would essentially take off more than all the new production, all the new supply that's coming online every year for the next 5 years. And this just means they're creating a huge supply deficit, you know. And so the answer to your question is it will certainly have a clear price effect because we're already seeing that ETFs, right, Bitcoin spot ETFs, corporations, they're already buying more than 6 times the supply, right? And if sovereigns like the US step in, this will definitely have a clear price impact.
That is really impressive data. You spoke about Europe a little bit, and I wanted to precisely go to Europe because the MiCA law has just been approved, which seeks to guarantee the legal security of issuers and crypto asset providers. How do you think this will affect the ETFs that invest in cryptocurrencies in the old continent?
So, as you said, so MiCA, markets in crypto assets, has just been approved, and I think there's some kind of transition period. I think 12 to 18 months transition period. Sorry, but what it certainly does, it creates a clear legal framework, right, for crypto assets providers to operate in. And I think what it will certainly do is it will lead to an increase in institutional confidence, right, in crypto assets. And ultimately, this means more growth, right? So fewer legal uncertainty. I think in the short term, it could increase the cost for ETP providers in order to comply with these new legal requirements, right? But at the same time, I think this harmonized kind of legal framework could make it easier for ETP providers to operate across these different jurisdictions, right, which had different kinds of regulation before MiCA. So I think in the short term, maybe some compliance adjustments, right, higher costs, but in the long term, because of increased confidence, less uncertainty, right, there will probably be higher growth.
Great. We're gonna talk a little bit more about Europe. Since Bitwise AM acquired ETC Group in mid last year as part of its expansion into the continent, I need to ask you, what are the next steps that you have planned towards this goal?
So what we've just achieved is the rebranding of the whole product suite, right? We've just rebranded all our ETPs from ETC Group to Bitwise. So all our 11 products in Europe are now called or branded with Bitwise. And what we're doing is we are increasing aligning with our colleagues in the US across the continents with respect to product pipeline, research, and we're continuously in exchange with our US colleagues. But I think in general, Bitwise continues its expansion, right, into different areas, including institutional staking with the recent acquisition of Attestant. So I think client assets continue to grow strongly, not only within exchange-traded products / fund business, right, but also other business areas like institutional staking and so on.
Well, we will be paying a lot of attention to the expansion of Bitwise AM in Europe. Andrew, we know it is very difficult to make predictions of the future, but we would like to know, what do you believe are the main risks and opportunities that cryptocurrency ETFs or ETP users will face in the next 5 years in Europe?
So I think the biggest risks, the biggest risks actually stems from increased competition. So what we've seen, especially since January last year, when US spot Bitcoin ETFs launched in the US, we've seen this fee war breaking out, right, where all of the US issuers engaged in this fee war and lowered fees quite aggressively, and probably in some cases to an extent which is probably not sustainable, right? But I think that also sent a signal to European ETP issuers to lower fees, and it also happened in Europe. So it has had the same effect. And therefore, I think because of this lowering in fees, right, lowering in revenues, the industry will be forced to consolidate, right? And maybe the acquisition of ETC Group by Bitwise, right, is the first step and also the first signal that the industry here in Europe is actually consolidating already, right? But I think the opportunities are an acceleration of inflows into crypto ETPs due to increased legal safety, right, due to MiCA and so on for institutional investors. I mean, in Europe, the UCITS market is huge, right? It's around 12 trillion euros. And European crypto ETPs are still just a tiny fraction of this. I think it's around 18 billion euros. So crypto ETPs in Europe only comprise around 0.2% of the whole fund assets, right, in Europe, of the whole UCITS market. Although it should probably be closer to 3% or even higher. So I think the opportunity is simply higher growth as institutional investors allocate or start allocating or maybe allocate higher percentages to crypto assets.
Well, thank you very much, Andre. That was our last question for today. We are sure this interview was very useful to all of the investors watching. Once again, we want to thank you for being here today, finding the time to accept this interview. Thank you very much.
Thank you very much, Teresa. It was a pleasure. Thank you.
It was our pleasure. Thank you to all the people watching. Please don't forget to share this interview and follow us on LinkedIn. See you next time.